I think one of the single hardest things about trading is clarity. You get analysis paralysis, your chart looks like a plate of spaghetti, and you're more confused than when you started. So today, we're clearing the clutter, but I'm going to ask you to trust the process. The name of the indicators are not matters. What matters are the settings, the logic, and how we wave them together. The magic isn't in the tool, it's in how you use it. If you're ready to build my personal clarity framework, let's hop over to the trading view. So here we are with a clean chart. The first part of our framework is what I call the momentum baseline. Its job is to give us a clean, quick visualization of the market's underlying momentum. To add it, we'll go to the indicators. Now, in a moment, I'll tell you exactly what to type in, but first, let's understand what we're looking for. We need something more responsive than a simple moving average, something that reacts quickly to the price. So, in the search bar, you're going to type in DMA adjusted average true range. Go ahead and add it to your chart. Alright, it's on your chart, but right now, it's just a generic tool. We need to shape it to our specific purpose. This is the part that makes it our momentum baseline. Let's open up the settings. In the Inputs tab, we need to make some specific tweaks. I want you to change the DMA period to 27. And the ATR period to 27 too. Why 27? This isn't a magic number, but it's the setting I found provide a great balance on these time frames. The key is that they're consistent. Now, the most important step, make sure Paint Candles is enabled. This is what turns our chart into an instant, reliable story. Click OK. And there we go. That's step 1. We have our momentum baseline. Green means bullish momentum, and red means bearish. Simple and clean. But if you stop here, you're going to lose money. Why? Because momentum can be misleading. A trend can look strong, but have no participation behind it, it's a trap. So how do we know if the momentum is real? We need to confirm it. For that, we need a second part of our framework, the convection engine. This tool's job is to peek behind the curtain and measure the flow of volume. As the old saying goes, price can lie, but volume tells the truth. Let's add it. Back in indicators, this time I want you to search for volume accumulation percentage. Now add it to your chart. Again, this is just a generic tool until we tune it. Let's open the settings. And to keep our framework consistent, we'll change the time period right here to 27 to match our momentum baseline. Then I'll just make the histogram a bit thicker so it's easy to see. Perfect. The framework is built, the momentum baseline on top and the convection engine on bottom. Now and only now we can talk about how to use this to find high probability setups. The first and the most straightforward approach is the crossover method. This is where we're looking for the exact moment when both parts of our framework get in sync. Let's look at this Bitcoin chart. See right here, our momentum baseline flips from green to red. The candles themselves turn red. A novice trader might jump in right away, but we're more disciplined. That color flips is our question, not our answer. The question is this a real shift in momentum? To answer that, we immediately glance down to our convection engine. And what do we see? Confirmation. The volume bars are also big and red. This tells us there's real selling pressure behind this move. When the momentum baseline and the convection engine both turns red at the same time, this is a point of interest for a potential short trade. And it's the exact same logic in reverse. Here's a spot where the momentum baseline flips green. Our first question, is it confirmed? We'll look down at the convection engine. And yep, it's green too. The alignment is the signal. It's simple, it's clean, and it removes a ton of guesswork. Okay, that's the first method. But what about joining a trend that's already moving? This brings us to a more nuanced approach I call the pullback method. Check this out. The momentum baseline is solid green. Our framework is telling us the dominant pressure is to the upside, so my brain is automatically based towards looking for buys. I'm not interested in fighting this trend, but look what happens. The price gets a little tired and dips below our green baseline. A newer trader sees this and they panic. But we have our secret weapon. We look down at the convection engine, and what does it shows us during the step? So, how the red volume bars are tiny and weak? The convection engine is telling us the selling is not serious. There's no real power behind it. This is a healthy pullback, not a reversal. So a trader using this method waits for the trigger. A strong decisive candle closing back above the green momentum baseline. That's the signal that the buyers have likely returned, giving you a way to confidently rejoin an exiting trend. So there you have it, two methods for one goal, clarity. But listen, and this is the most important part, this is a framework for analysis, not a financial advice crystal ball. If this framework gave you a little more clarity today, let me know about by hitting the like button and drop a comment with the number one thing you are still struggle with on your charts. I'll read them all to decide what to make next. Thanks so much for watching. I'll see you on the next video.